Hello and welcome to another episode of Copper Bottomed. It has been about 4 months since I did the last one, possibly longer. I think I recorded one in August, and here we are just before Christmas, the week before Christmas. It is the 19th of December, and here we are again with Copper Bottomed. I thought I would do a review of the macro and then get into some thematic stuff and then run through some exploration results. Having a look at some companies as well. So it's been a pretty torrid 4 or 5 months in the copper space. I decided to have a look at the copper price relative to gold again. And what you can see is I've got 3 charts along the bottom of this page here. I've looked at the copper price from 2000 when it was at, trading at $1 a pound, and we're now around $4 a pound. And it looks like the copper price has kind of gradually risen over the last 25 years, since that's all well and good, or 24 years. When I compare it with the gold price, I've moved the copper onto the right-hand axis here. All of this data is from Yahoo Finance, by the way. It's quite good. You can pull down historical numbers for free. And this is the gold price on the left-hand axis. And what you can see, broadly speaking, is the gold price moves in tandem with the copper price and vice versa. And there's a period here in 2004 to 2008 when copper prices ran ahead of gold. And actually what we've just seen since this peak here in late May of 2024, gold prices have massively outperformed copper prices in the last 7 months. Really interesting. A lot of this price spike here was financially driven. The funds were buying into copper on the back of the Cobre Panama disaster, the curtailment of production there. And since then, and kind of relatively weak demand in the grand scheme of things, copper prices have given back loads and loads of gains, all of the gains really from the front half of the year. And of course, gold has continued to do well. I like this chart. This is what I consider the real copper price. I've rebased it and I've divided the copper price by the gold price. And what that gives you is a proxy for copper prices in real money. I mean, let's assume that fiat currencies are an ongoing experiment in debasement of your currency, and that gold is a store of value. So in real terms, what we've effectively seen is that in the last 25 years, the quarter of century that we've seen since the year 2000, is copper prices have been declining. And that is with the exception of a real price spike during the build-up to the global financial crisis. And this was when China joined the World Trade Organization and they just kind of started manufacturing everything. So this falling copper price is a testament to the efficiencies of big producers. It shows you that when you build big assets and you get your capital paid back, then you can incrementally increase your production at a low cost. And because the margins are fine, you've got to whack up your volumes, and so more and more comes out, and it actually drives the price down. So that's the reality that we've been living through. But of course, elastic bands can't be stretched forever. There is a snapping point and a breaking point. On the 30th of September 2024, BHP put out a report. Their research team, BHP Insights, put out a report called How Copper Will Shape Our Future. And in it, there are some excellent slides, and I thoroughly recommend that you download it or ask for it to be downloaded and printed out for your Christmas stocking, and that you can sit around over the Christmas period and read a bit. It's really, really interesting. So I pulled out some of the images. They talk about copper demand projected to grow 70% through to 2050 at an average of 2% per year. In the text, they write that total global copper demand saw 3.1% compound annual growth over the last 75 years. So that's a CAGR of 3.1% over the last 70 years. That's 75 years. That's extraordinary. But only 1.9% demand growth over the 15 years to 2021. And it's going to jump with the increase to 2035. It's going to jump back to 2.6% annually. And it's got 3 key themes. The demand drivers are based on traditional economic growth, the energy transition and digital, which is AI and data centers. So let's look at the traditional, and really what BHP talks about is that electrification is a 20th century mega trend set to continue. And it talks about your electricity consumption related to GDP. And as you get richer, you use more electricity. And remember that we're now 8 billion people on the planet, and we're going to start increasing our electricity consumption because that's what happens when you get richer. And of course, copper is a proxy for electricity because it's of all its uses in wiring. So looking at the demand jump from 2021 through to 2025 and then on to 2050, there's a big chunk. The biggest chunk is through economic growth, and that's the 4 billion people going from low wattage lifestyles to high wattage lifestyles, and 2 billion people going from 0 to low watts. There's a bit through the energy transition, and there's even a little bit from digital, and there's an erosion from substitution and thrifting, but basically demand jumps from whatever that is. It looks about 30 million tons up to whatever that is, 43, 44 million tons. And then even further through to 2050. BHP estimates that the world will need about 10 million tons new mined copper supply in the next 10 years. Okay, it's got a good graphic on where the mine production has come from in the last 30 years. And you can see this significant growth here from South America. The big mines in Chile were being built in the 1990s. They came on stream in 2000s, and there's been another leg up here. They talk about material coming from Asia Pacific, which is the this blackish, this charcoal color here, and that's seen steady growth from Australia, Indonesia, PNG, and of course Oyu Tolgoi in Mongolia. And then the third one is this is Africa, which is this sand colored here, and this growth in the last 10 years, last 15 years is largely backed by Chinese investment, and that is going to continue. Okay, now moving on to the broader market, BHP put in this comment here, what do we mean by the copper market? And they say 31 million tons is the total copper demand, of which about 10 million tons is scrap, both direct and secondary. So you've got about 21, 22 million tons of your primary mine supply. That's what we're talking about. Primary mine supply. This is what the miners can deliver. I find this is really interesting. You've got 80% is through sulfides and through concentrate, and 20% is coming from oxides. You've still got 20%. You've got 2 million tons of copper, 4.4 million tons of copper coming from SXEW. And that's a remarkably high number when you think how mature this industry is. The copper industry is a big industry relative to its other metals. If you think about what a major is doing when they divest out of coal and they're trying to move into the energy transition, they're trying to position themselves towards the future-facing markets and also get exposure to the kind of the AI revolution and batteries and all of that. Battery metals, yes, it includes nickel, graphite, tin, lithium, and cobalt, among others, and copper. But if you look at the size of these markets, I mean, the nickel market is less than 4 million tons of primary material. The graphite market is 1.6 million tons. It's a relatively decent size, but that's all terminal market stuff. You don't get a price in graphite. You've got to go and deal with your customer in China, principally, about what spec and the chemical specifications of graphite. So 1.6 looks like a relatively big number, but it's actually tiny. Tin, 380,000 tons. It's very hard for the majors to get any leverage in tin, or lithium, 180,000 tons, or cobalt, 190,000 tons. These are niche metals. And remember, everyone got excited about lithium, but we've now got masses of infrastructure there to produce lithium. We've got lots of mothballs and care and maintenance mines. There's no shortage of ability to produce lithium. So if you're really looking to play the resources sector in the battery metal space or in the energy transition space, you've got nickel, which is tough for the majors. It's tough for the strategics to play in that space. You've got tin, which is quite go-go. It's quite exciting, but again, very small investment universe. And then you've got copper. And so here we are, all about copper bottomed. The BHP report continues to talk about where their future supply might come from. It has got a lot of growth and a lot of assets in South America from which it can deliver if the price is high enough. It talks about in Africa here. This is an interesting bar. This is the only region with a grey bar where it talks about low maturity, full potential, and this is not just BHP numbers. This is Wood Mac as well. Wood Mackenzie here on Q2 report. So there's lots of copper in Africa that can come out, but there's growth basically from Latin America, from Africa, and from Asia Pacific. Not much growth forecast from North America or indeed Europe or the Middle East. Pretty small numbers coming from, and Russia and the Caspian also probably less and less. Now, I've put in this little photograph of Liam Morrissey. He is the MD or the CEO of MS Risk. And I had lunch with him a couple of days ago, and he was just talking about the security situation in West Africa and whether, no matter what your commodity is, whether it's uranium or gold or copper or lithium, the situation in Burkina Faso, Mali, Niger, now expanding into northern Ghana, northern Nigeria, it's pretty grim listening. So I would say if you've got the choice of not having exposure to investments in this area, that's a wise thing to do. So time to get the hell out of Dodge of West Africa. Of course, Africa is a vast continent, and there are many countries which are good places to work. And Robert Friedland will tell you that the DRC is great, and Angola is opening up, and Namibia, etc. But West Africa, time to move on. Thank you, Liam. That was a sobering and eye-opening conversation at lunch a couple of days ago. This is a very familiar slide. Almost every junior mining company in the copper space will have one of these kind of crocodile-mouthed charts showing that there's a kind of a 10 million ton per annum gap here. The reason why I like this is the detail that BHP has gone to do. They've taken Woodmac numbers, and then they've put on BHP analysis. They've put on lifetime extensions, which are BHP's assessment of current supply that will require significant expansion capex to maintain production levels. Okay, so the BHP has drilled down into Woodmac's current operations and has actually stripped it out as to what needs lots of capital to see the supply being maintained within an operation. And what you can see here is that there is declining supply profile. And even if your demand figures are pretty weak, this is not being very aggressive out to 2035, there's still a 10 million ton per annum shortfall, because this is the reality of the situation. Mature assets being worked incredibly hard to try and just maintain production. And part of the function of that, or part of the reason for that, is a function of the age of the assets. They're getting older. Here we are. This is what's that? Kind of 2/3 of the assets are over 21 years old. About a quarter. Sorry, I'm going the wrong way. That's 0 to 10. That's 11 to 20. Yeah. So over half are older than 21 years old, and what's that? About, well, you can see it's kind of about 2/5. Is that right? No, it's less than 2/5. It's more than it's less than a quarter is 50. Oh, it's about a quarter, which is over 41 years old and up to 100 years old. I mean, these are old assets. That come 25% of mine supply there, and of course, it's all been accompanied by this grade decline, quite extraordinary grade decline. And what does that mean? That means that it gets more and more expensive to extend the life of your mine. So even though you've paid off your initial capex, you've still got to put in capex to get those brownfield expansions going. And the BHP database and the Woodmac database looks at whatever it is, 41 projects here, and they look at the cost of greenfields projects and the brownfields projects by date or by year. So you can see that the ones 15 years ago were lower cost, and then the ones which are predicted to come on in the future or are being commissioned at the moment, we've seen this kind of 65% increase in the brownfield capital intensity. Okay, these are all large projects producing over 50,000 tons per annum. And again, another great graphic. This is good BHP work. This shows you, sorry, this is Wood Mac work, but I think BHP has been involved in this. Yeah, BHP have adjusted it. Given the consistent pattern of delay on large challenging projects, we apply a risking adjustment to this supply, resulting in the reduction of 0.5 to 1 million tons per annum from the early 2030s against industry estimates. Basically, greenfield projects keep getting pushed back and keep getting pushed back. So this is the BHP adjustment. This is the dotted line here. And you can see that by 2030, they are producing predicting this kind of shortfall in greenfield's new production capacity. So this is 5 million tons per annum. Remember, we need 10 million tons per annum by 2035. And they are predicting these kind of delays for 4.5 million tons here. So again, the supply gets pushed out. And I know that this slide has been doing the rounds. I've seen it on LinkedIn many times. The only reason I kept it in there is just to show you that something like Escondida North is kind of deeper than Escondida. So your brownfield program here to maintain Escondida producing at above 1 million tons per annum, you've got to bring in the deeper material here. So it costs more, and you won't do it. I mean, I know that the expansion has been approved at Escondida, but the supply is consistently going to be constrained by the costs relative to the price. So thank you, BHP. That was a great report. As I was looking through various presentations and looking for different companies, I was in the Vizsla Copper presentation, and they had this great slide quite early on talking about how industry is getting involved in explorers. And they pulled up 6 examples of companies working in British Columbia and 4 examples of kind of global copper investment: Fortescue, Barrick, Newmont, South 32. And I've been aware of a whole series of investments made by strategic mining companies or large mining companies looking to get exposure to copper. And of course, the biggie is Anglo American, the copper division of Anglo American. That will go probably next year, maybe the year after, but it's going to get chowed. And you can see that there's a real trend here. So even though copper prices have had a bad 7 months and they've been giving up ground since the end of May, and even though gold prices have outperformed copper prices, still the strategics, still the majors are looking at the assets. So of course the headline, the big one, was BHP and Lundin paying $4.4 million for Filo. More recently, we've had $40 million investment by Agnico into Atex, Aldebaran through the Newton, kind of the Rio Tinto Newton process. They've got a staged $250 million for 20% in Altar. Mitsubishi, a couple of years ago, put some money into Marimaca. And again, this year we saw a $68 million investment where Assor bought a 15% stake. It was a combination of a capital raise and buying out some existing shareholders. Last year, in 2023, Teck made 3 investments in American Eagle, and this year in American Eagle, you saw a $29 million investment for 20% by South 32. And I will be talking about American Eagle a little bit later on. I've got a slide on them. So this is crucial. There is value in your copper assets. I've written up some conclusions from the first half of Copper Bottomed. One is that there are these tectonic plate movements of supply and demand. They're slow moving, but they're going to drive copper inexorably and inevitably higher. Higher copper prices are coming. If you go back to the point 2, is if you go back to the divergence between the copper price and the gold price, you could say that this is a good time to buy the bombed out stocks, buy low, sell high. If you've had gold stocks in your portfolio that have done really well, maybe clip something out and consider a partial gold copper switch. Now, I'm also aware that there are many gold equities that haven't moved, and you may feel that that's worth sticking with. I completely understand that. But if you've made lots of gains on your some of your gold names. You might want to switch them into some of the other gold names that you think will do well, or you might want to switch horses in terms of moving from gold to copper. So keep an active view on your own book. My view is that without fast-moving copper prices, low capital intensity potential is a vital predicator for small cap success. What do I mean by that? I mean that when a metal price moves really fast, you can get really good performance on big low-grade assets. However, when there's a kind of a steady grind higher, which I think is what we're more likely to see in the copper market, then I think you go for the quality assets. You go for the ones which have got the potential to be developed at a lower cost, which have got potential for greater growth. They've got potential for shorter timelines to production, better infrastructure, etc., better economics. That's what I mean by low capital intensity. Basically, it's better economics. Point 4, in the previous slide, I showed you very clearly that strategic interests are making investments into advanced and early stage projects. I mean, Hercules, it's now called Hercules Metals, Hercules Metals Corp. Barrick invested $23 million Canadian when they were basically one hole into the copper, that is. And again, this is perhaps more my opinion than the data that I've seen so far, or that we've run through today, is that exploration results that expand the envelope, as you grow your resource and expand the envelope of known mineralization, that really creates lasting value. So go with those companies. Now, here I am, CEO of Fitzroy. I've taken some flack online for the transaction with Ptolemy Mining. I set up Ptolemy Mining with Matt Gordon 3 years ago. I think we've made a kind of a proto discovery. We're in the process of making a discovery, and we looked at the prices, we looked at the markets, and I did a peer comparison, and I recused myself from the key decisions. And I got the chairman of Fitzroy to speak to the chairman of Ptolemy Mining, which was Matt. They agreed a deal and a price, and this is what we've got. We're very, very flat land. It's a massively de-risked proposition. We think that we've got a potentially world-class IOCG copper deposit in Chile on the coastal belt. We know that it's a world-class district. We know that we're very close to Candelaria, and we also know that we've got the same geology as Candelaria. We've got the same mineralization, we've got the same age rocks, we've got the same tectonic setting. So it's a lookalike in terms of geological setting, scale, and geophysics. So tick, we like that. It's also significantly de-risked in terms of, just look at this topography. It's flat lying, it's 370 meters elevation. We've hit lots of oxides. We've got lots of strike. We've got near-term development opportunities. We've got the Panamanian Highway and the transmission lines running through the eastern side of the property. And we're just 60 kilometers from Copiapó, and we've got a large copper footprint. So this is why we like it. It's greatly de-risked, and it's got lots of upside. We've done some drilling this year. We've got some great results. I say we, this is with Ptolemy Mining. This is the private company. This is the one that Fitzroy is taking over. If you look at the average weighted grade of all of our intersections, it's 0.61% copper, and it's all in oxide at the surface. A median intersection of 35 meters at 0.52% copper, and a couple of good highlights, 30 meters at 3.5% copper. That's from about 140 meters downhole, and 135 meters at 0.73% copper from surface in oxide. So we've got lots of step out and down dip drilling to do. We've got lots of trends for step out and infill drilling, and that is what I am doing with Fitzroy Minerals. We're just wrapping up the accounts at the moment, getting audited accounts, closing a capital raise, and then we're going to be off and drilling this in Q1 next year. So that's just by way of background, because I've had on the conferences, on the conference circuit, I've had a few inquiries saying, "Hey Merlin, what are you up to?" And so that is what I'm up to. Right, enough about Fitzroy Minerals. The last copper bottomed I did was in August. I've pulled down the weekly results, both from the ASX, which is a relatively new thing, and from the TSX on a weekly basis since the 7th of September. If you kind of do this as I've done, and you pull it down, you can see these copper and SEPs kind of week in, week out, what you soon begin to realize is that when you start getting a grade width intersection of above 30, it starts getting interesting. You know, kind of 27 meters at 1.1% gives you the 30 meters here, 30 grade width. And anything over 100 is really pretty special, pretty spectacular. I put in these kind of dotted arrows occasionally, kind of just because these things are interesting. I mean, Firefly, the market cap is good. They're chasing this old producer in Newfoundland. Those are good guys. They're doing good work there. American West Metals up in Nunavut. You'll see they've got quite a lot of intersections kind of being published over the autumn. I mean, this one here is 53 meters at 3.9%. These are spectacular results. I had the pleasure of sitting down with the 20% carried stake Aston Bay Holdings at Mines and Money in London, and that was really interesting. I mean, it's fascinating geology. I haven't gone into it in great depth in this one, but I have looked at it before. So do put American West Metals or Aston Bay on your radar screen. It's worth keeping your eyes open on that. Okay, now this one here, Minsud, 51% owned by South 32, Foran Mining, market capitalization of 1 point something billion. It's pretty crazy, in my opinion, but chapeau to them. They've done a fantastic marketing job. Bravo Mining in Brazil, their market cap has run, but they've got great results. Again, they've got that precious metals. Is it precious metals? Is it base metals thing? But I guess that's an embarrassment of riches, which is quite nice to have. Here's another Aston Bay holding, so it's the same one. Of course it is. Right, what else caught my eye? Wiesler Copper up at Woodjam. They've got a micro market cap of $12 million, but they're doing quite good stuff. 177 meters at 0.77. That's a good result. Kodiak more low grade, although that's actually one of the higher grade intercepts that I've seen them produce. And Dundee in Serbia, I mean, their market capitalization is huge, and so it's not quite the exploration space. And then Pan Global, 18 meters at 1.24%. I do talk about them later, but I liked that. Coming across here, Solaris, they're drilling again in Ecuador. Elections coming. Let's see what happens in Ecuador in 2025. Arizona Sonoran keeping up the good work. I'm not going to talk about them much here today. So that was September. October started. Okay, Gladiator Metals. This was the start of quite a run of Gladiator Metal results. So I will be talking about them. 109 meters at 1%. That was good. And over here, 79 meters at 1.4%. And I think there's even another one. Here we go. 23rd of November over here. 98 meters at 1.5%. And I think there might even be another one. Gladiator Metals, I will come and talk about them. There's more Firefly, there's more Solaris, Warintza, there's more Aston Bay Holdings, American Eagle. Okay, let's talk about those. Metals acquisition, they're inside a mine, so getting 27 meters at 8.7 is a great result. But it doesn't really move the needle. Right into the heart of November. Again, more Oyo Tolgoi, more Entree Resources. This asset, this company, wow. I've spoken about them before. More Warintza. They're drilling. More Gladiator, DLP. That's a funny old company. Huge intercept, but kind of low grade. Let's not go there. And then more American Eagle. 855 meters at 0.3%. I will talk about American Eagle. I had a look at Brixton. I mean, because that 1.4 kilometers at 0.35, it's a funny company. If you look at it, the presentation's great, but they've been doing the same thing for 15 years, and the market capitalization is kind of slightly giving up the ghost. I'm going to look at Hercules and about 3 other companies. 1, 2, 3, 4. Yeah, so Hercules and 3 others. So 4 companies. I've ranked them by market capitalization. So, of course, this was Hercules silver and is now Hercules metal. Note to self, don't put your commodity in your title because you never know what you're going to find. Obviously, they had this extraordinary spike up with their first drill hole, but they're still basically on an upward trend. I mean, you could argue that you're on a downward trend now through 2024, but it's been a rough old year in the copper space. Let's not be too hard on these guys. Interestingly, this is another company where Charlie Gregg is a consultant to Hercules. He's a consultant on this one, and he's a consultant on American Eagle. I'm talking about this because there's a perception that, I feel that there's a perception that Hercules have had one good hit and then it's been kind of bad luck or not going in the right direction ever since then. I give the project and the company more credit than that. I think this is going in the right direction. But exploration isn't always easy. You don't always just kind of have quick wins the entire time. But let's look at this news release. Let's just go through it. Hercules intersects 338 meters of 0.47% copper with mineralization increasing at depth and to the north. Okay, so increasing at depth, that's in the cross sections down here, and increasing to the north, here's the map. And when you open it up, I know it's a bit small on this screen here, but that is hole 12, and it's the northernmost hole in this area. They've got a couple of, I think, is that, that's complete. That green one is complete. 2415, I think it is, and this is 2412. So I don't think we've got assays back for these two yet. So this is the most northern hole that we've got with assays. Right, okay, going back. Hercules 2412, their 12th hole of this year, has intersected 338 meters of 0.47% copper, with the final 154 meters ending in 0.51 and 104 ppm moly, marking the first recorded increase in mineralization at depth on the property. So, okay, so this is important. The final assay results reveal the 315 meter step out from hole 8 ended in strong mineralization with alteration increasing from phyllic to outer potassic in the latter half. Furthermore, a north-south cross-section, this one, now demonstrates copper and potassic alteration are increasing towards the Grade Creek zone. And here's the Grade Creek zone up here, section AA or BB. I can't remember whether this is section AA or BB, but they're both. So we've got, presumably it's this one. Presumably it's AA because we've got holes 8 and 21 on there. Alteration increasing towards the Grade Creek zone where a large untested chargeability and magnetic anomaly presents one of the most compelling targets for a vertically extensive early porphyry center. And then the highlights: the strongest primary mineralization below the enrichment blanket to date. That's good. It's a step out of 315 meters. Yes, that's good. A new trend of increasing copper and potassic alteration towards a large untested chargeability and magnetic anomaly. Well, we hope that's good. It looks good, but we won't know until we drill it. Trend is intersected progressively closer to the surface to the north. Yeah, yes. But if you look at the topography here on this section, you can see actually that it may be closer to the surface here, but here you've got an extra, whatever it is, 150 meters of hill to be dealing with. So I might not have a full picture, but that's not clear from this cross-section. Modeling now constrains the geometry of a late porphyry intrusion, allowing drilling to focus on the significantly better grades in all directions. So this is the late porphyry here, this finger that's come in here, or this tongue. The tongue of, it's actually not a tongue. It looks like a tongue, but it's a wedge. Well, it might have come vertically up and the whole thing might be rotated. But anyway, I don't want to get into the weeds. But interestingly, so this is low grade. And here's the enrichment blanket, which is sub-horizontal. And then here, around and underneath this barren dike, you've got the best bit of mineralization, 154 meters. And the thesis is that this over here is going to be even better. So let's see, but I like it. I like the science. I like the way that they're doing systematic work. It's a 300-meter step out. It's not crazy. It's not conservative. It's just kind of a punchy, good step out. And then Chris Paul, the excellent CEO, writes, We're seeing primary copper grades now increasing below the secondary enrichment blanket, which is an exciting development. Grade, alteration temperatures, significant implications for the grade creek zone geophysics anomalies. Good. Core photos are good. And associated with the A and B veins is a transition from fillet to biotite alteration, potentially signaling proximity to a porphyry center. Basically, they think they're onto something. So I know this is a downward trend at the moment, but I like the work they're doing and they've got money. So that's good. Next, okay, American Eagle. I do own some shares in this. I bought some shares. So I'm conflicted, but it doesn't stop me talking about it. I like that share price chart. I think it's going in the right direction. That is the direction of the trend, which is very different to the metal price movement, which has kind of come down this way. They put out a news release on the 18th of December. Continues to deliver exciting results. NAC 2433 delivered 3 distinct zones of high grade with an intercept of 505 meters at 0.52% copper equivalent. And I've spoken with Stephen Stewart about this, and he knows I don't like copper equivalents, but it's such a mixed system here. It's a gold copper system that in this instance, it makes perfect sense to continue to report copper equivalents. They've also done a little bit of petrographic work and metallurgy, so I'm not too fussed. They say it's the second most northerly drill hole assayed by the company to date, and it confirms the presence of strong copper-gold mineralization, which highlights the scale and extends the system northward and to depth. Okay, good. And the previous holes show that this part of the system is large, continuous, and hosts localized zones of higher grade copper-gold mineralization, some of which extend to surface. Results from 5 additional holes from the 2024 drilling program are pending. I like that because I think it means we're going to get more good results. So I think the share price is going to continue to go. I think it's going to respond to that. All parts of the NAC system tested to date remain open, with the company just beginning to unlock the property's full potential. Refer to drill hole map. So it's funny, they go, we got more holes pending, and then they get all parts of the system tested to date remain open. Basically, they know that they've hit mineralization in those holes, but they can't find a way of saying it except how they've said it. But obviously, we don't know the grades. Right, and so this is the Babine porphyry stock. This is about a kind of a kilometre plus across, and they've tested this part of it. I think he said that they've tested 20% of the project area. And when you look at it in section, there's the gold enriched south zone down here. It's got kind of a vertical extent as well. At depth in the copper enriched north zone, in this bit here. So this is down at 400 meters below the surface, maybe 600 meters below. And then they've got a copper bit coming out at the surface as well here. So I really like it. In the south zone, this bit here, they published some results. These are collated and these were shown in the presentation. Multiple intercepts of 100 meters plus at 1%, 302 at 1, 126 at 1, 144.9, 175.76, 50 at 1. These are really good results. Remember what I said earlier about, when you're getting 100 gram meters, you're doing well. And again, from the presentation, I nicked this graphic. They've drilled 31,000 meters for the past 3 years at 10,000 meters a year. They've now got funded 3 years ahead. And this year, they're planning to do 25,000 meters. So they're going up to, so the run rate for the last 3 years averaged 10,000 meters. And now they're going to do 2.5 times that this year. So they've got money. They've got tech on board. They've got $37 million in cash. Their market cap is 107. So, I mean, what's that? A $70 million EV. This is, I like this, and I like it. I won't say any more. Okay, moving on to Pan Global. Now, this is a very different kettle of fish. I also own shares in Pan Global, and if you look at this share price performance, this is 2024, that's 2023, that's 2022. You've basically had 2 years of just kind of loss of value, and that trend is entrenched and tough. So it's tough to turn it around. What's going to turn around this share price chart? So I'm much more comfortable with that share price trend than this one. However, when you look at the market capitalization of $36 million, the potential for a drill hole or event to turn that into a $60 million or into a $100 million, it doesn't take much in terms of the exploration potential to turn that around. And this is a cutting from their front cover. It shows you that this is their main project, Escondida, and you can see Asnacollar and Los Frailes there. You can see Las Cruces over there, and you've got infrastructure here, and you've got solar power. So it's incredibly easy to get this stuff into production. And I come back to my point about, in this environment, you want to be with low capital intensity projects. That's one of the reasons why I like the Buen Retiro project for Fitzroy Minerals, is because it's low capital intensity project. And that's exactly what Escondida is. It's surrounded by other developments. And I put this snippet, again, this is from their presentation. I put this snippet in because of the gravity anomalies that's seen. They're going to be drilling Bravo. They've just got ground access here. They've drilled out La Romana, and they've got their kind of basic resources there, and Cañada on Deep Canyon over here. There are lots and lots of other targets, and it's easy development. I really like it. They didn't have a single kind of banging news release. So what I did is I just copied out the news flow headings from July. The advanced exploration at Carmenes copper, nickel, cobalt, gold project in northern Spain. Some of these Carmenes, the copper grades are kind of 10% in some places, and the gold grades are good as well. So I like Carmenes. That gives you optionality. Ore sorting for copper and tin, you like that. They've intersected mineralization in July, Escondida, Cañada Honda. They started exploration at Bravo, so good soil geochemistry with the Bravo gravity. They doubled the size of the soil geochemistry at Bravo. They've intersected 1.4 meters of copper over 18 meters at La Romana down here. They did a private placement. They raised $7.2 million in the end. They did geophysics at Bravo. And they've got tin recoveries as well. So they've got a clean con, good metallurgical test results, which is a crucial differentiator in the copper belt, because in the pyrite belt. In the Iberian pyrite belt, a lot of the cons are dirty, and to have clean con really is a differentiator. And they're going to be drilling Bravo. They're going to be drilling La Romana. They're going to be pushing on a PEA and a maiden resource. And they're going to be drilling Carmenes, which I also like up in the north. This is more speculative just because you've got the trend against you. But if you want to be contrarian, have a tickle. That's what I've done. And then finally, Gladiator Metals. This is the smallest of the bunch. If you look at that share price graph, you can see this is a 5-year chart. It's kind of very, very blocky. It's taken a while to get going. They're just establishing a base here. But I think this company's got real momentum. Look at these headlines from their website. August the 27th, they're starting with 2 rigs at Cowley Park. They get marr-johnson on board. They drill. They get 110 meters at 1% copper equivalent at Cowley Park in October. In October the 15th, they hit significant copper skarn mineralization at Best Chance, which is, so these are 5 kilometer step. These are sorry for the quality of the image. I just did a screen grab from the website. Maybe I didn't even do a screen grab. I might have copied image, which is probably the worst thing to do. But that's about 5 kilometers across there, and you're kind of 5, 10, 15 k's away. There's Best Chance up here. Then they flesh out their team, appoint a few people, and work with the First Nations, and then they hit 79 meters at 1.37% copper at Cowley Park. They do a private placement with strategics. They hit more mineralization at Cowley Park, 98 meters at 1.5%. They upsize the private placement to $12.6 million. And then December the 16th, this week, 30 meters at 1% within 52 meters at 0.75 in new target zones within Arctic Chief, which is here. So I really, really like it. What have they got? They've got Cowley Park, which is a shallow, high-grade copper moly mineralization over 700 meters of strike length, with grades between 1.5% and 2% copper equivalent, broad widths, open in all directions. It is a skarn, so skarns have got some pretty funky metallurgy, so who knows what the recovery is going to be like and how this thing can be processed. But starting point, big system, hitting good mineralization, and it's not just at Cowley Park, it's at Cub here, where they've got high-grade copper mineralization. It's at Chiefs, which is here, where they've got shallow, high-grade gold copper, and it's at Arctic Chief, including Best Chance and Grafter. They've got prospective high-grade zones of copper and gold mineralization. So I like. There we are. That, I think, is the end. Thank you for sticking with me. Any questions, just pop them in the comments on the video or write to me. And thank you for listening this far. And I'll be back with another copper bottom before too long. Thank you very much.